gotta cover Bitcoin here. We're gonna hop straight into it. And remember, I'm not a financial advisor, none is financial advice. But look, this is crazy right now. This is crazy. We just now broke down below this bear flag that I was mentioning inside of the last video. All right. And as you know, bear flags are bearish signals. So I was telling you guys, hey, we're gonna break down below this bear flag. Get ready. It's gonna continue downwards, and that's exactly what it's doing right now. All right. So that is one thing that you have to prepare for, right? Then we have the unemployment rates coming out on the 3rd, which is going to be tomorrow. So tomorrow we got the unemployment rates coming out, which is going to be a pretty big deal because unemployment is at a very high, very high amount right now. There's a lot of people unemployed. And then we have other stuff like we have the PMI, and that's going to be coming out as well. All right. So we got a lot of stuff coming out here for Bitcoin. Also, some people thought that, this right here was the bear flag I was talking about all along. But remember, this is a separate chart I have because it's much cleaner. If you look at my second chart, you can see that we have the main bear flag that we broke out of. And then we started to create a separate bear flag outside of that one. And that's the one that we were just now tracking. But this is a dirty chart. This is what I like to call my dirty chart. This is how I day trade. This is the chart I use to, get in and out my trades. This is my dirty chart. All right. But yeah, if you want to do some trades of your own, on DeFi exchanges, check out Avantisfy. You can do leverage trading in there. You can short it, you can long it, you can 75x leverage on DeFi on on Avantisfy for Bitcoin. So you can check that out, link in the description. It doesn't take nothing to sign up. You just connect your wallet and boom, now you're DeFi trading. All right. So you can check that out, link in the description. But like I was saying before, guys, we're going to continue downwards. Bitcoin just dropped to 65K before I started this video. So it's probably going to continue to go down even further. We're down 3.4% in the last 24 hours. Trump had his little speech. And of course, that's going to make the market drop. And it's always, he can make the market drop saying anything at this point. He can say he farted and it's going to start dropping. All right. So if Trump is coming live saying something, just know unless it's legit, he's probably going to make the market drop, right? The only way the market is going to go up with Trump saying something is if he announces the war with Iran is over, standing next to like an Iranian leader. But he can't do that because all the leaders, right? There's no leaders left over there, right? They've knocked them all out. So I don't know how this situation is going to be solved. So we'll see. But yeah, 3.3 down in the last 24 hours, 5% in the last 7 days. So we've still been going down here inside of Bitcoin. The fear greed index is at a 26. So it's going back into the extreme fear range, right? Eventually we're going to be back down inside that extreme fear range. So you should probably prepare for that coming pretty soon. And if that happens, now we are looking out for Bitcoin to come down to 60K. So that's what we're looking at. And I've been saying this all along. What have I been saying with the percent R trend exhaustion? Go back and watch all my Bitcoin videos. I've been saying the same thing. The white line is the short-term trend, and I know it sounds redundant at this point, but the white line is the short-term trend. The blue line is the long-term trend. As the short-term trend breaks far past the long-term trend, we have to come back down to that long-term trend. It's going to pull the price down. It happens time and time again. This is what happens every single time. Nothing different is happening right now. Nothing different is happening right now. Everything that I said is happening everything that I said is going to happen is happening because this is how it works inside of the market, right? You have to know how the market works in order to make money inside of the market, right? And this is just what happens. We might see one last attempt at a push upwards. As you can see, we're seeing a little bit of bullish divergence here. Bullish divergence on the charts is represented by lower highs on the bullish divergence on the chart is represented by lower lows on the chart while simultaneously getting higher highs on the MACD, right? And if you look at this, we're getting higher highs on the MACD. Boom, boom, boom. We have 3 booms, just like that one song, right? Boom, boom, boom. We got 3 booms right there. And then we got and then we got lower lows being created on the chart now. So the divergence started right here, and as you can see, lower lows have been being created since. The next lower low, it's probably going to be like around here. We have 63K. That is going to be a support for us. So that's going to be the next lower low. Prepare for 63K next. And then that is probably where the bullish divergence is going to try to reverse, but it's going to be a bull trap. When you see that bullish divergence hidden, just know it's a bull trap. Probably going to try to reverse, get up to 66K, and then continue down to 60K. So you're probably going to see it hit like 63, try to get back up to 60, or go down to 63, try to get up to 66K, and then continue to dump down to 60K. That's probably how we're going to end up seeing that bullish divergence happening. So just remember, it is a bear or a bull trap. They're trying to trap the bulls. So it is what it is. All right. If you also open up the daily chart here and you guys can follow along with me, I think this would help you guys out a lot. If you're trying to learn how to do technical analysis, follow along as I do the videos and you'll learn eventually. So I do all this for free. I don't charge anybody. But remember what I was talking about last time on the percent R trend exhaustion. And mind you, the MACD, a completely free indicator. Percent R trend exhaustion, completely free indicator. I have two indicators that are paid for that you can check out. Link in the description. It's called Chart Prime. We're coming down to a discount price point, which is at that 60K level. And it's very good at checking support areas and resistance areas. We have the premium price point, which is way up here at the top where it says premium, which is 98K, which is resistance. So this pretty much marks your levels for you, and it just gives you everything that you need to know all in one paid indicator. So that is why I like using Chart Prime. And if you don't know how to do technical analysis, you could use Chart Prime too. And this is what it looks like without any other drawings. It pretty much does everything for you, right? It did the bear flag that we had back here, right? And eventually, as this thing continues to go down a little bit more, it's going to mark this one right here as a bear flag as well. So it does this stuff for you and shows you your volume profile and all that good stuff. So you can check it out, link in the description. But if you don't want to pay for indicators, you don't have to. That's why when I do my technical analysis, I don't really show that as much. What I like to show you guys is the free ones. So if you just want to do it for free, just follow along and you'll eventually learn how to use these indicators. The percent R trend exhaustion and the MACD is what I use to trade every single day, right? I trade every single day. I trade options, SPY options to be specific. That's just the best one for me, most liquidity. But let's keep going over this and you guys will learn as we continue to go. As you can see here though, the same exact thing that I said was about to happen is happening because we were resembling this. The short-term trend far exceeded the long-term trend on the percent R trend exhaustion and had to come back down. And as that happens, the long-term trend was going sideways and eventually dropped down too, which is going to pull the whole price down. Same thing happened again. Again, watch all of my previous videos. I mentioned this is what's going to happen. And this is exactly what happened. All right. So, don't say I didn't warn you. And, just pay attention. Just keep paying attention and you will learn. We're getting more selling pressure on the MACD. We're also creating bullish divergence on the MACD simultaneously. All right. So right now we are seeing that selling pressure building up, but we are also creating bullish divergence. And what is bullish divergence again? Higher lows here on this MACD. When you look over here, higher lows on the MACD, while simultaneously getting what? Lower lows on the chart. So when you pull it up, higher lows on the MACD here, while simultaneously getting what? Lower lows on our charts. So we're going to keep pulling back down here. And the next lower low is probably going to end up bringing us down to 60K, possibly to 50. And then that bullish divergence is going to be completely played out. And then you're going to see that push upwards from the bullish divergence. That's why I'm saying 50K is that level that I'm stopping at. It might stop at 48K. It might stop at 45K. But it is coming down to this range. And I think it's going to be 50K because, I can't predict everything. But this is what I believe it's going to be. I believe it's going to be 50K. As you can see back here, we have good support at 50, but it does come all the way down to 49, which is why I say it could come down lower. And then on top of that, when you look at this resistance right here, you can see is right at 48K. So 48K is resistance for us as well. So that's why, or I mean support for us as well. So that's why I think that we are possibly going to be stopping down there at this level right here. So there's a possibility we can go down to 48K, even 45. So you got to be prepared for that. Be prepared for everything. There's another 45K support, and you can see a little bit right here. Let me move this little arrow right there. You can see 45K resistance. Well, 44K resistance. So that could be another level, and we can go ahead and mark that right there, because you can see that level is hit multiple times. It hits there, it hits there, and I guarantee if we come back, it hits even more back here, right? I guarantee it, and I don't even have to look at it to know that, because this is just how good my technical analysis is. So look, again, 44K we hit here, so 44K is a possibility too. We hit there, I guarantee there's more. We hit there, we hit here back in 2021. So yeah, there's a bunch of examples for that. All right. But you know, it is what it is. I'm just trying to give you guys this good info. So let me know what you guys are thinking about this so far inside the comments. But yeah, let's keep going. So the next thing that we got to discuss here, we've talked about divergence, all that good stuff. We looked at the 4-hour chart. We looked at the daily chart now. Now we can pull over here to the weekly chart. So the weekly chart is much more long-term, right? It's much more of a long-term chart. And as we are looking at the weekly chart here, we can see that the percent R trend exhaustion is still building down and still, you know, continue to push downwards. But remember what I said about the bull traps, right? Because so far everything that I've been mentioning has been happening. Bull trap is literally in the process. If it starts pushing up, you know that's a bull trap, right? But right now it's going to be pushing down just a little bit more. They're probably going to intercept right here, and then it's going to push up a little bit and continue downwards, right? And the reason why I say it's going to pull down a little bit more, because we know it's going to come down to 60K and then eventually down to 50. And then that's when you're going to see the bull trap happening on the weekly chart. And that's when you're going to start seeing it push, right? And we're also still in the process of creating bullish divergence on the weekly. So we have to wait for that. And that's what's going to lead us into our bull market going into next year. Like at the end of this year, going into next year, that's what leads us into our bull market. So I'm not completely bearish, but until the end of the year, I'm pretty bearish. All right. That's how I'm looking at it. That's how I'm looking at it. And then from here, you know, we just got these people talking about different stuff, like this guy talking about the further dump coming for Bitcoin, Ted talking about dumps coming for Bitcoin, President Trump talking about, you know, the inflation and how it's the highest stock market ever, which is not true. But if you become good at technical analysis, you can make money on any day in the stock market. All right. For instance, I was watching SPY yesterday, and we'll just talk about this very, very briefly. Look at what SPY is opening up in, right? Look at what SPY is opening up in right now. SPY is opening inside of a bearish day right now, right? And yesterday, the SPY started right here. Yesterday, the SPY started right here, and then it just started to push up, right? And then it stopped here. From here down to here was a 100% drop. That one drop from there to there was a 100% drop. How did I know that it was going to drop right there? Because the 15-minute chart on the percent R trend exhaustion was completely maxed out. Now, the 5-minute chart was maxed out the whole entire time. So you don't look at the 5-minute chart when you're looking at the percent R trend exhaustion, because it can stay maxed out forever. When I say forever, I really mean forever. You also don't look at the 1-minute chart when you're looking at the percent R trend exhaustion, because it was maxed out for the longest time ever. So if both the 1-minute and the 5-minute were maxed out for so long, you wouldn't have known when to get out, right? This is why I made a short, right? Look at my recent shorts, not the first short that you see, but the second one that you see, like from two shorts ago. You're gonna see a short that says why how to trade meme coins or something like that, right? I was talking about why the 15-minute chart is your best friend when you're trading, because the 15-minute chart is going to give you the most accurate reversal trades, right? It's going to give you the most accurate reversal trades. Now, does it always do that? No. Back here, it didn't do it too accurately, right? Because if you would have waited back here and you tried to do it when it first bottomed out, you probably would have gotten burned. You probably would have gotten burned just a little bit. You would have tried the long right here, but then it would have went all the way down. But if you were good at technical analysis, you can be like, well, I'm just going to keep holding even though I bought at the wrong time, because technically we are building bullish structure, right? Technically, we're building bullish structure here. We have a bullish expanding triangle. If you look down here, bullish expanding triangles are bullish signals, or you could spin it another way and just be like, it's a descending triangle or a descending channel. But anyways, eventually it broke out upwards. So you probably would have gotten in down and up there. All right. But usually the reversals here are next to none, just unmatched. So when you see the reversal here on this percent R trend exhaustion, that would have been your signal to start shorting, because it gave you that signal all the way up here. Once you got that red down arrow, on the percent R trend exhaustion, that's your signal to hop in, right? That's your signal to hop in. And if we look at it, that signal would have really helped you out a lot, right? But if you would have gotten in right before the signal, when it's completely maxed out, then you really would have did well, because right here, it's completely maxed out. Then you start shorting, and that would have helped out a lot. And then on top of that, if you couple that with the chart prime indicators, let's pull up the chart prime indicators. If you couple that with the chart prime indicators, you'll see with these momentum wave bands, we were maxed out on the momentum wave bands. And whenever it starts to turn pinkish, purplish like that, that means it's probably going to start pushing back downwards. So it was completely maxed out on the momentum wave bands. Again, chart prime link in the description. It's a paid indicator though, so you got to pay that money. And the volume profile was showing us massive volume in this area. The red volume bar here, or the pinkish purple one, just like how it's pinkish purple here, is just showing you this is where massive selling happens. And that's exactly where massive selling started happening, right at that resistance. And then the green one shows you where massive buying started happening. That's why we had the recovery, and that's why we had this push upwards, right? So again, link in the description for chart prime if you want to do that, or you can just do free indicators, which are the percent R trend exhaustion that I use, and the MACD. These ones I use every single day. All right. So anyways, this is pretty much all I got for you guys today. Hit the like button and subscribe. Go ahead and check out the link in the description again for chart prime and Avantisfy, best DeFi trading platform where you can trade leveraged perps for stocks, crypto, and gold and stuff like that, and Forex. It's literally everything. But yeah, this is all I got for you guys today. Hit the like button, subscribe. As always, I'll be back with another video.